afternoon, ladies and gentlemen, and welcome to the Zinc Plant 2008 IFRS Financial Results Conference Call, hosted by Mr. Sergey Masayev. My name is Kevin, and I'm your event manager. During the presentation, lines will remain on listen only. If you require assistance at any time, please key *0 on your telephone, and a coordinator will be happy to assist you. I'd like to advise all parties this conference is being recorded for replay purposes, and now I'd like to hand over to Sergey.
Thank you. Good day, ladies and gentlemen. Good morning to those in New York. Welcome to the first half CZP earnings conference. My name is Sergey Masayev. I'm the chairman of Zinc. Today with me is our CFO, Mr. Boris Berman, and our commercial director, Mr. Galich. Earlier today, we issued a press release detailing the financial results of the operation for the 6 months ending June 31, 2008. And before we proceed, please note that various remarks we make about the future expectations, plans, and prospects of the company constitute forward-looking statements. In accordance with the International Accounting Standards, all forward-looking statements involve known and unknown risks, uncertainties, and other factors that may cause the actual results to differ materially. You can read the full disclosure on slide 2. And if we move to slide 3, please, Mr. Galich will give you world and Russian zinc market update and a review of the company's operational results for the first quarter. Mr. Berman will follow him with the comments on CZP financials, and then we will be happy to answer your questions. I'll now turn the call over to our commercial director, Mr. Berislav Galich.
Thank you. Good morning and good day, ladies and gentlemen, once again. I will start my presentation with the slide number 4. The price inventory chart is continuing to look very depressive. The price is continuing to slide down as the inventory is gathered in the warehouses. World financial crisis are starting to choke the real economy. Zinc is losing ground faster than the other metals. Next slide. In case of lead, although the perspectives look much better due to the considerable demand in 2008 and increased interest expected in 2009 from the battery producer, the price is still continuing to go down together with the other metals. I expect that the PV price will recover faster than the zinc and some other metal prices in the near future. If you go to slide number 6, the figures that present the price and exchange rates for the first and second half of 2007 and first half of 2008, we can say that they are only confirming what is already said. Zinc was losing more than $600 each 6 months. Strengthening ruble added to the decline of the financial results. When the results of zinc plant are in question for the first half, let's start from the slide number 8 that shows the raw material supply. You can see that the domestic suppliers continue to supply Chelyabinsk zinc plant at the agreed pace for the first half of 2008. No disruption occurred. Polymetal is excluded as a supplier due to the high cost of transport from Far East to Chelyabinsk. The majority of the import has been planned for the second half 2008. That's why in the first half you have a lower figure than in previous periods that we show. Moving to the slide number 9, zinc and byproduct production. The production of zinc went in accordance with the production plans based on the sales program that increased compared to the 2007. So you can see that figures showing the zinc production is reflecting our increase of the production in 2008, planned in 2008, and our expansion on the market. On the slide number 10, zinc sales are shown. And most important figure there is domestic sales. Compared to the previous periods, you can see that our aggressive expansion on the domestic market gave very positive results. In the same time, exports stay quantity-wise on the approximately same figure as previously, and that's due to the increased production overall. Our customers stayed when the traditional ones are in question, as they were in the previous years. Magnitogorsk, Novolipik, and Severstal took their portion of our production, with the expectation that Magnitogorsk will in the same year, 2008, but in the second half buy much more due to the opening of the new galvanizing line. Others customers are very important to us because those are the small customers. They pay much higher price, and we took a lot of effort to attract them back to us in the second half of 2007, and we continue to do so in the first half of 2008. Next slide. Operational performance when the mining segment is in question showed that our mine, Akjal, put a lot of effort to increase production, and ore mined and ore processes figure show this in practice. Unfortunately, zinc content was a little bit below our expectation, but it was actually expected, and we believe that we know that by the end of the year they will increase their production of concentrate and reach the target figures which were budgeted for 2008. That's all from my side for now. I hand over to Mr. Birman. Thank you.
Thank you, Mr. Galovich. Good morning or good afternoon, everybody. And let's look at the slide number 13. Our revenue in the first half of 2008 was 5,664 million rubles. It is 25% less compared to the second half of the previous year, or 28% less compared to the first half of 2007. The zinc price at the LME was 36% less compared to the first half of 2007. So the revenue fall was not that sharp due to the increase of zinc output and sales and consolidation of Brock Metal Company. Our gross profit went down considerably. The reasons are obvious: fall of zinc price and appreciation of Russian ruble to US dollar in the first half of the current year. And gross profit margin was 10% compared to 20% in the second half of the previous year, and EBITDA was 654 million rubles. And net income was negative due to two non-cash issues in our reporting package. First of all, we had to write down the goodwill of Akjal due to falling zinc and lead price, especially zinc, and we decided to write down the exploration and evaluation costs of 268 million rubles. On slide number 14, we show our revenue structure by products. As always, the main part of our sales is zinc and zinc-based alloys. In the first half of 2008, it was 5 billion rubles, or 88% of our sales. We didn't sell our lead concentrate in the first half of the current year, actually there was no market, but we managed to find a customer, even two of them, and all the quantity of lead concentrate produced in the current year was sold later in the third quarter, and we will finish this in the current quarter. On slide number 15, we present our consolidated cost of sales structure, and materials and consumables represent 60% of the whole pie, and you remember that it was more than 70% in previous periods, 2006 or 2007. It reflects the decline in zinc price and accordingly in zinc concentrate price, and all other parts of the cost proportionally went a little bit up compared to the previous periods. On slide number 16, we show our performance by segments. Actually, all three segments could be profitable in the first half of 2008. Actually, all three of them generated positive EBITDA, but net income in case of zinc plant was affected by write-down of exploration costs, and in case of Nova Zinc by the fact we didn't sell our lead concentrate. Broke metal revenues, of course, went down compared to the previous period due to the fall of zinc and aluminum prices, but the margin of the company is less dependent on the market, and Broke metal managed to get the EBITDA of 11 million rubles, which is in line with the budget. Slide 17, please. It shows our cost structure by segments. Chelyabinsk zinc plant, 62% zinc concentrate, and other materials, it's less than it used to be, not only because of fall of zinc price, but also by the fact that we use some zinc cake from our stockpile. In the first half of 2008, 3,000 tons of zinc was produced from this stockpiled byproduct, which is free. All the other costs look like following: 13% utilities and fuel, depreciation was 5%, selling general and administrative 4%, and all the others, or 8%, sorry, SG&A, and all the others 4%. Nova Zinc, the structure is more or less similar as it used to be: 18% depreciation, 17% utilities and fuel, 16% materials and consumables, 10% others, and 18% of this 10% is transportation, because the big other component of others is negative changes in work in progress and finished goods, again due to the fact of not selling the lead concentrate. On slide number 18, you can see the broke metal cost structure. It's very simple. It's mostly zinc and aluminum. They purchase zinc from Chelyabinsk zinc plant, aluminum from other suppliers, and all other costs are very small: 2% utilities, 6% all the others, 5% selling general and administrative. On slide number 19, we show our balance sheet highlights. Net debt went down to 959 million rubles. We kept servicing our debts according to the schedule. And On slide 20, you can see our cash flow highlights, and we generated 826 million of net cash from operating activities, and our cash used in investing activities was 600 million and 400 million rubles financing activities. The highlights of these investing activities are shown on the next slide, number 21. We invested 178 million ruble to reconstruction of sulfuric acid unit number 4. We completed this reconstruction in the third quarter of 2008. We invested 86 million to exploration of Amursky deposit and 51 million of investments, the bottlenecking investments relate to Akzhal mine. On slide number 22, we have to state that we decided to stop exploration and development of Amur deposit. The results of JOC compliant resource estimation, along with sharply declined zinc price, led us to this decision. So that's why the costs of 268 million rubles were written off in our financials for the first half of 2008. That's basically all, and we, as always, will be happy to answer your questions. Thank you.
Ladies and gentlemen, your question and answer session will now begin. If you wish to ask a question, please key star, then 1 on your telephone. Record your name, then press the hash key. If you then decide to withdraw your question, simply key star 2. All questions will be answered in the order received, and you'll be advised when to ask your question. All other lines remain on listen only. Alternatively, you may submit a question on the web by typing in your question in the question answer section on your screen and clicking on the ask button. Thank you. Your first question comes from Sergei Donskoy. Please go ahead.
Good evening, gentlemen. Two questions from me. First of all, could you estimate your break-even zinc price at plant level and at the group level, including Akzhal mine? Well, I understand that this number is, it depends also on prices of other metals, but I think it's possible to give some ballpark range at least.
Good evening, Sergei. Do you want to ask the second question?
I will ask my second question after you tell me the answer to the first.
The answer, you're right, it depends on a variety of factors, and roughly, at the current ruble-dollar rate for the zinc plant, it is between $1,500 and $1,600 per ton of zinc.
15 and 16. Okay.
But again, at the current ruble-dollar rate.
I see.
And in case of Akzhal, it's somewhere in the same area, $1,500. Again, it depends on stripping rate, on many factors.
I understand. Okay.
But the idea is in this area.
Yeah, I understand. Well, then, my second question is, it relates basically to your operating cash flows. What was your operating cash flow in the second quarter of the year, and what is the I think you can already give some estimate. What is the cash flow or cash outflow at current zinc price?
Well, at the current zinc price, the cash flow is slightly negative, what is very natural, but I don't think we can give any estimate, because the environment is changing every day, so it's very difficult to estimate.
Okay, I see. And I've just looked at your presentation slides, which you gave or reporting first quarter numbers. And one thing I see here is that cash from operations in the first quarter was approximately 1 billion rubles, and your cash from operations for the first half was less than that, about 826 million rubles. So there was apparently a decrease, or the operating cash flow in the second quarter was negative. What was the reason for that? Accumulation in inventories, or something?
Yeah, right. Normally in winter time we decrease our stockpile of concentrate, and when the winter is over we start increasing the stockpile because the costs of unloading of concentrate in winter time are huge.
Okay.
So you know the answer. You are absolutely right.
Okay. And maybe the last question so far, at least. How would you describe demand for zinc at the moment, not during second quarter, but at the moment, from foreign customers and from domestic customers? Is it still there? Do you see demand going down? And if it goes down, what is the main reason for your by your judgment? Is it just lack of working capital or general deterioration in macro situation? Thank you.
Well, probably it's my turn to answer this question. So when the domestic customers are in question, yes, there is a decrease in demands and orders, let's say. First of all, it came as a lack of cash, as a lack of cash. So they couldn't purchase under the conditions we had in our contracts. But we are working with them and trying to sort of establish a reasonable relationship when the payment is in question, which satisfies both, because we know and understand that our customers have to live, otherwise we won't live. When the export is in question, when the domestic customers are in question, I would say that we are starting to feel decreased consumption because they don't have a market to sell. It's not dramatic yet, but there is signs of this. When export is in question, of course, you can export everything at the price which the market will accept, and that's mainly pure zinc, high-grade zinc, or you can take it to LME warehouses at the LME price, whatever goes with it. It could be sold, but this decision has to be made by board of directors, I suppose.
I see.
At the present conditions, of course.
Maybe one more question then, related to exports. I think that one of the versions explaining the recent dramatic sell-off in all commodities across the board is that many international traders find themselves in a difficult situation in terms of liquidity. And so they have to basically liquidate the inventories at whatever price, which has been driving the market down. What's your take on that? Do you think that it's a realistic explanation? Do you think that international traders do experience problems like that, and that it could impact the real market?
Well, concerning the international traders, I know a number of them who are dealing in zinc, and I do know that they have a problem with liquidity. But there are some other things which are more sort of frightening, and that's slowing down of the real world economy, which will eventually come back to us. So the most important to us is, I think liquidity will be solved sooner or later, as soon as the profit comes. But if the economy stops, it will take a longer time to see it running again at a pace which will satisfy everybody and that will have a constant increase, not so big as it in price, not so big as it used to be because it was real, but the increase that will satisfy us.
Okay. Okay. Well, thank you, gentlemen.
Thank you.
Thank you.
Thank you. There are no questions in the queue at present. But just to remind all participants again, if you wish to ask a question, please key star, then 1 on your telephone, record your name, then press the hash key. Again, just remind all participants again, if you wish to ask a question, please key star, then 1 on your telephone, record your name, then press the hash key. Your next question comes from
Artyom. Hi, my name is Artyom Tinov. I'm from Templeton Asset Management. My question is dedicated to your cash flow statement. You got the futures contracts not used on hedging activities. Can you just expand on what are these futures contracts amounting 22 million rubles for the year and 6 months to 8? Thank you.
Miroslav, will you?
Sorry?
Considering the hedging, well, I can say so, but cash flow and what was the second part of the question? I didn't understand.
Just you've got in your cash flow the futures contracts not used for hedging for 22 million. So can you expand on this amount? Just tell me what is the substance of these operations.
When the hedging is in question, I can only tell you the following. Since this year we started hedging, we didn't have this practice before because, well, it wasn't, we didn't use it. But since this year we made the decision to start hedging, but we do not hedge, we hedge only which is the quantities of zinc which is exposed to the price. That means that we are matching our books and concentrate, metal in concentrate and metal out, we sort of naturally hedge. What is left over in our books and exposed to the price, we do hedge. And this year this helped us a lot not to have a squeeze on the price, and we actually got back for the first half about $2.5 to $3 million from the brokers.
Okay, and well, my concern is that these operations, I mean, all hedging operations with futures and all the derivatives, are quite risky now.
No,
and,
yeah.
Well,
because of the
before Boris gives you full explanation, I just discussed this. Recently this matter with our specialist in hedging, and my question to him was, "What are we going to do once the price starts going up? Should we hedge or not?" But at the moment, we will continue hedging the way we are doing it. We don't think we are too much exposed to any risk, and then we will have a time to stop once it's necessary.
Okay.
I'd like to add that hedging doesn't create new risks. Vice versa, it make our market risks lower. And in the period we are now discussing, the price was falling, and so this hedge saved us some money.
I understand that, but nobody actually knows what happened with commodities right now. If you look at the futures curve, I just see the price for 2013 for zinc about $1,400. So, but nobody knows what will happen tomorrow. It can be $2,000.
You know what? Most of our zinc sales are what we call naturally hedged. We match the period we pay for concentrate and period we sell zinc. For example, we pay for concentrate by a quotation period of month after month of delivery or 2 months after month of delivery. And actually, we buy concentrate and sell zinc using the same zinc price in the equation. So we are mostly naturally hedged, and our future contracts relate only to the part of zinc which is not naturally hedged. For example, we purchase a lot of concentrate and we know that we will not sell the zinc immediately.
Okay.
Okay.
Thank you.
Thank you. Your next question comes from
Sergey Donskoy.
Good.
Hey, yes, hello. One more question from me, if I may. Could you provide some color, well, some idea on where treatment charges may go next year in the industry? Whether do you think they will go down and may offset or increase the pressure on you, or they will go up and help you get through if current low prices persist?
If we talk about the TC for a concentrate, I do believe that next year will be slightly in our favor because there'll be still excess concentrate on the market. But as you know, if the low price of zinc stays, for a longer period of time, probably first who would close our mines.
Mm-hmm.
But if the demand is falling down, the smelters will not increase purchase too much. So the concentrate metal and the concentrate sales and concentrate demands will be sort of a little bit in favor of buyers because there'll be some excess concentrate on the market. And as I heard, the TC, and that's what we expect would be, is around 200 in Europe, 220, 230 at 1,500.
Mm-hmm. 200.
220, 230 depends on the location and of the mine and so on.
Okay. And have you already begun your negotiations with the Russian customers over price premium for the next year?
Yes, but this is not the main concern at the moment, and I don't think we will change dramatically our premiums. Our premiums are still above the premiums in Europe.
Mm-hmm.
So slight movements could be made if, let's say, we have to finance some sales and so on, some movements upwards. But mm-hmm.
How will you estimate this premium? On my numbers, on my estimates, it should be around $500 at the moment. Is it correct, or is it more correct to look at price premiums in percentage terms?
I think it should be looked in percentage terms, but the premium in Europe at the moment is for a zinc around $130, $120, $130.
Mm-hmm.
So 500. Well, I would like it to have it because I would be able to cover my costs.
Yeah.
But nobody would pay it because you still have sellers in Europe
mm-hmm.
who will sell for a much lower premium.
So how would you estimate your domestic premium over LME? Is it 15%, 10% at the moment?
Well, our premium, if we bring it back to a zinc plant,
yeah.
So at the plant, our premium is at the moment 150. No, sorry, it's close to $200 at the plant.
Mm-hmm, mm-hmm.
Which is much bigger difference than when you buy in Europe. You buy, let's say, premium 200, but you have to pay. You get the premium 200, but you have to pay transport, import costs, and all the other stuff.
Okay. So given the current metal price, it's something around between 15 and 20%, right?
That's right.
Okay. Thank you.
Thank you. There are no questions in the queue at present. Just remind all participants again, if you wish to ask a question, please key star, then 1 on your telephone, record your name, then press the hash key. There are no questions in the queue at present.
Well, since there are no further questions, I very much thank you for participating in this conference call. And as always, we look forward to answering any additional questions that you may have in the future. Thank you very much.
Bye-bye.
Thank you, everybody. Bye.
Thank you, Mr. Mosaev. Ladies and gentlemen, that concludes your conference call for today. You may now disconnect. Thank you for joining and have a great afternoon. Thank you.
Thank you.
Thank you.
Thank you.
Okay.
Bye.